Hi, this is CH. This video is part of a series of videos titled My ABCs, or Absolutely Biased Comments, to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the iShares US Thematic Rotation Active ETF that has the Bloomberg ticker THRO. This video is done as a follow-up request from a viewer's comment in my previous video covering the HSBC GIF Ultra Short Duration Bond Fund. I did a video on DYNF in June, so this time round it is for THRO. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. iShares has its roots from an indexing team in Wells Fargo, but properly grew after the team was sold to Barclays under the Barclays Global Investors business segment. Barclays Global Investors decided to aggressively grow the ETF business in the year 2000 and officially branded the products as iShares. iShares gained quick popularity from its original suite of equity ETFs tracking the MSCI International Stock Market Indices, as well as being market leaders to launch ETF products covering bond markets and thematic investments such as sustainability and ESG. In 2009, BlackRock bought over the entire Barclays Global Investors business segment, including iShares from Barclays. BlackRock continued to expand the iShares business in alignment with increasing investor demands in ETFs and indexing mutual funds in the past decade. Today, the iShares business has grown into a gigantic market leader in the ETF space, managing over $3.3 trillion of AUM through more than 1,400 ETFs offered globally. The iShares US Thematic Rotation Active ETF that is covered in this video is currently only listed in the New York Stock Exchange or NYSE in US. There are no Europe UCITS versions available. This strategy also is currently available for US equity coverage only, and there doesn't seem to be any disclosed plans to launch a global equity version. Perhaps running thematic investing on global equities is a lot more complex. Going through both the iShares US Thematic Rotation Active ETF or THRO and the iShares US Equity Factor Rotation Active ETF or DYNF is an interesting experience, as this is essentially a never-ending debate on whether thematic investing or factor investing works out better. Thematic investing is all about finding the next exciting story that paints a wonderful picture of the future, and from it, trying to deduce various paths that you can participate in the story. There is not a lot of clarity or certainty about the paths, so an investor has to have a strong belief on the story and place somewhat blind faith that some paths will indeed lead to the pot of gold under the rainbow. Nobody tells a fairy tale with only statistical numbers. Factor investing is all about cold hard numbers and statistics, and finding out from them repeatable patterns and optimizing results. There is a heavy reliance on what has happened in the past and the belief that the same will happen again given the similar environment or condition. There is no romance or dragon to slay in factor investing, unless you start to build a model to calculate the success probabilities of different ways to kill a dragon. Is one better than the other? This is like comparing apples to oranges, so there is no absolute answer. However, since iShares has created ETFs for both approaches, we can compare their performances later to see which one has been more successful so far. iShares recently published a 2025 mid-year thematic investing update white paper, and in it, the iShares US Thematic Rotation Active ETF was highlighted to have done well with its slowing growth and tariff uncertainty theme by taking selective exposures in consumer companies that are more economically resilient and less exposed to tariff pressures. This is an example of telling a story and finding out paths to participate in that story. Looking forward, iShares is focusing on the artificial intelligence team and the geopolitical fragmentation team. As seen in the short summaries here, we can see these teams will involve various sectors, and very selective companies are identified by iShares to potentially do well through these teams. While iShares, being the largest ETF provider globally, has various ETFs to cover each specific sector or sub-team, the investment ideas are consolidated and optimized into the iShares US Thematic Rotation Active ETF. So this gives a nice introduction of what the ETF is all about. The iShares US Thematic Rotation Active ETF lists 4 co-managers in the ETF webpage, double of what DYNF has. Philip Hodges, who manages DYNF, is also here, plus Raphael Savi, who is the global head of BlackRock Systematic, co-CIO and co-head of Systematic Equities. This suggests there is a higher emphasis in iShares on this ETF compared to DYNF. There is no clear distinction on the roles and responsibilities of each of the 4 co-managers for the ETF, so I assume they work more on a team effort basis. The investment objective of the iShares US Thematic Rotation Active ETF is simply to seek long-term capital appreciation, so this is clearly not an income play. It is also stated here that the ETF was previously called BlackRock Future US Themes ETF. That probably sounded a bit too fictional to attract investors. Similar to DYNF, this ETF has a requirement to invest at least 80% of assets in US companies. The definition of US companies is quite broad though, as it can be companies domiciled in US itself, which should be the majority, non-US companies that are listed on US stock exchanges, for example China companies that are listed as US ADRs, non-US companies with majority businesses in US, or any company that is included in the benchmark index. Despite this policy, I would expect the ETF to have near full investments in US companies except for a small amount in cash equivalents for liquidity needs. Otherwise, an investor might as well go for a global equity ETF instead. There is also a specific mention on stocks having above average earnings growth potential, so this might tilt the portfolio towards more growth style. There is a long paragraph on the ability of the ETF to use derivatives and options as part of the investment strategy. We will see later if there are any disclosures on the actual derivative usage in the portfolio. The prospectus then provides an elaboration on the investment process, which uses a systematic framework to identify themes and analyze relevant companies, then evaluate the themes to produce returns forecasts and investor sentiments, and finally consolidate and optimize the positions within the construction of the portfolio. Given we live in a data-abundant world today and the usage of artificial intelligence is increasing at a rapid pace, the ETF relies heavily on using multiple ways to analyze, assess, and utilize data for the investment process. An example can be found in the product brief document that shows the model processing through various financial documents and news sources to identify data signals that can be further combined into a theme. The prospectus also states the ETF can have up to 1/3 securities lending in the portfolio, which sounds okay. Other additional investment aspects mentioned here also look like normal disclosures for US listed ETFs. That's all there is in the prospectus relating to investment strategy and process. The product brief document provides a nice summary of the ETF for investors who skip prospectuses and just wants a quick overview. It indicates the ETF is meant to be a core US equity position in an investor's portfolio with the intent to generate long-term capital appreciation. There is an informal objective stated to outperform the US equity market. It is clearly stated this is an actively managed ETF, which means the ETF performance will deviate from the US equity market. The heavy reliance on data and AI models is also clearly stated to let investors know this is more a systematically driven strategy rather than a fundamental research process. The product brief also quite ambitiously states the ETF aims to capture themes of all investment time horizons, from short-term market shocks to multi-year structural changes. There is no way for investors to verify this though, especially in a blended portfolio of multiple themes. so I'll take this with a pinch of salt. iShares does have a detailed product deck and a historical themes deck that should offer more details on the investment strategy. But these documents are only available for professional investors, so I won't be able to cover them in this video. The iShares US Thematic Rotation Active ETF was incepted in late 2021 and currently has about 5.5 billion US dollars of AUM, which is significantly smaller than DYNF that grew about 4 billion US dollars in the past 2 months to the current 22.2 billion US dollars AUM. Nevertheless, a 5 billion ETF is still a decently sized product in the market, showing investor interest in such strategies. Sector breakdown is updated daily on the ETF webpage and shows a high allocation of about 42% to technology. If we add the 10% communication, that would be more than half the portfolio in technology-related stocks. This reflects the artificial intelligence team probably takes quite a sizable allocation in the portfolio. If we compare against S&P 500 index, we can see that the technology overweight is only about 7.5%, so it is not really too excessive. Other notable differences are the industrials overweight and financials underweight in the ETF. Industrials overweight is a result of the infrastructure team, but the financials underweight is interesting. Probably because there is currently no significant banking policy changes from the Trump administration yet, and therefore no meaningful themes to invest in. The portfolio currently has 276 holdings, and the top 10 are, without surprise, dominated by the mega tech stocks. I am not really a fan of equity funds and ETFs holding so many positions, because the diversification effect becomes minimal after about 50 stocks or so. These large holdings numbers are common for systematic strategies though, as the models calculate down to the decimals. iShares provide the full holdings in the ETF webpage, and we can see easily that the last 80 stocks in the portfolio have allocations of only about 0.05% or less. What can 0.05% do? Even if the stock doubles in price, that just means 0.05% gain in the overall returns. I would rather the ETF make the portfolio a bit more concentrated and focus its bets. There is unfortunately no information at all on the current themes available in the portfolio and their associated allocation in the portfolio, which is a shame because that would give investors better color on what the ETF is doing instead of waiting for a semi-annual market insight update. The ETF has a total expense ratio or TER of 0.6%. This is noticeably higher than DYNF's 0.27%, which suggests the amount of work involved in managing this ETF might be double of DYNF. But I believe iShares can reduce this fee if they want to aggressively promote this ETF one day. While the objective of the iShares US Thematic Rotation Active ETF is to seek long-term capital appreciation, it does still provide a quarterly distribution, given it is a common practice for US-listed ETFs to distribute out dividend income. However, as the strategy focuses more on growth-style stocks, the distribution yield is quite miserably low at around 0.2%, which makes the distribution rather meaningless. The iShares US Thematic Rotation Active ETF has a dynamic performance chart available in its webpage that compares the ETF against the benchmark S&P 500 index. The chart allows for free toggle of start and end dates, so it is useful to zoom in to specific time periods if you need to do some analysis. The webpage also provides annualized, cumulative, and calendar year performance data for the ETF, and also includes the benchmark numbers for easy comparison. The only not so ideal thing is that the data is only available up to the end of the last month. From these data, we can see that the ETF has outperformed the benchmark slightly in 2022, underperformed slightly in 2023, and outperformed decently in 2024, leading to a nice overall outperformance since inception and for 1 and 3 year periods. Year to date is slightly weaker, but there is still a few months left for the ETF to catch up. Let's use Morningstar to run some additional comparisons. Here is the same since inception chart where I've used the Spider S&P 500 ETF or SPY to replace the benchmark. And this shows THRO is indeed a worthy consideration to replace SPY as a core US equity position, although it does not have a long enough track record, so we don't really know whether a thematic focused strategy can withstand different market stress situations. Plus, we also do not have enough information on the underlying themes and rotation model to figure out whether they work well across time periods. Adding DYNF into the chart gives us the answer why DYNF has attracted more investors' monies than THRO. Therefore, at least from iShares' perspective, factor investing seems to work out better than thematic investing in recent years. Perhaps it is because thematic investing is more complex and comes with more uncertainties. But it will be interesting if iShares can one day publish a white paper to discuss this. Shifting to 1 year time period, we can see both THRO and DYNF actually are quite close in performance most of the time. But there is just this 1 or 2 instances where DYNF gets a little more boost and moves forward. Nevertheless, it is good to see both ETFs quite consistently outperforming SPY most of the time, showing active strategies can help to generate alpha returns. Multi-thematic strategies are quite common in mutual funds, although most of those available to international investors are global equities instead of US equities. Here are some examples from Allianz, BlackRock, and Fidelity. As seen, all of them have lagged behind THRO by quite a gap, probably as a reflection of US equities having performed better than global equities in recent years, but also reflects THRO is doing something better than these funds in terms of constructing the multi-team portfolio. Shifting to 1 year time period reduces the gaps, but still shows THRO outperforming the mutual funds. Given THRO is a US equity strategy with a growth style bias, let's compare it with US growth equity mutual funds as well. Here, I have included 8 popular mutual funds in the market, and we can see THRO has done very well since inception period by outperforming all except for Lumis Sales US Growth Equity Fund. The main drag for the mutual funds seem to be the late 2022 to early 2023 period, where THRO held up really well. Shifting to 1 year time period gives the mutual funds a sigh of relief. 5 of the mutual funds performed better than THRO, although aside from Lumis Sales and Offspring, the gaps for the rest are not that significant. In consideration of the performance of the longer time period, I would say THRO is still a worthy consideration over most of these funds. With that, let's summarize our findings. iShares is well known to be the ETF market leader and is part of BlackRock, the world's largest asset management firm. There is no doubt in the resources available for iShares to continue innovate to create new investment product ideas and improve existing ones. Multi-thematic strategies have for a long time been what most equity mutual funds do, either implicitly in the investment process or explicitly stated as a fund strategy, as the amount of effort to cover macro research, identify themes, and figure out relevant underlying investments used to justify the higher fees charged by mutual funds. However, with technology advancement in the systematic investing space, ETFs such as the iShares US Thematic Rotation Active ETF prove that it is possible to run multi-thematic strategies with lower fees. I like the resulting tougher competition as it simply means fund managers need to work harder and investors get better products. Aside from the semi-annual update on the focus themes, there are no details available on what are the specific themes currently covered in the portfolio. This information is perhaps available in the product deck, though it is available only to professional investors. Similar to DYNF, there are also no details available on the rotation model, and therefore it is difficult to assess the effectiveness of the model. The ETF was only incepted in end 2021, meaning it has less than 5 years of track record. This makes it difficult to assess whether the investment strategy and process is sustainable in the long run and whether it can do well through different market stress conditions. That being said, the performance of the ETF so far has been very decent, showing some persistent outperformance against S&P 500 index, making it a potential candidate as a core US equity exposure in an investment portfolio. It has also done decently well compared to various US equity and global equity mutual funds. It should also be worth noting that the ETF performance is slightly weaker than the iShares US Equity Factor Rotation Active ETF or DYNF. While it is too early to judge that multi-factor investing is better than multi-thematic investing, it is definitely interesting to see how these two ETFs develop and perform going forward. In conclusion, similar to DYNF, the iShares US Thematic Rotation Active ETF is an interesting product for investors who prefer to rely on an active solution to determine the best mix of investment themes, rather than going hands-on to pick individual thematic ETFs or funds. At this point, I think the track record of the ETF is still a bit short, and there are definitely areas where the model can be improved for even better performance. Therefore, investors can perhaps consider using this ETF as a complement to core US equity exposure for now. This concludes my absolutely biased comments on the iShares US Thematic Rotation Active ETF. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.